Shut up! Fifth round, you must be out your mind. Lame. Fifth round pick, but I don't move like one. Lost 40 mil, but I still ain't done. They ain't paying me right, but I made them rich. Whole city buzzing off a QB switch. 446 on a rookie scale, but the merch going diamond like I ain't failed. They post my throws, they boost they brand. Out of league looking shook, this wasn't the plan. Pay me, don't play me. Fans show up just to see me dilate. Dre sales hit like a top 3 slot. All my contracts say I'm not. Pay me, run that check. I bring more than you ever instead. Run it up, business is booming, let's talk numbers. I got more views than your whole draft class. Turning haters into fans with a no-look pass. Every rethrow got a million replays. Still getting paid like a vet from no 3 days. Jerseys moving like it's Yeezy drop. Stadium full, even practice pop. From the HBCU to the coldest land. They got me cheap, but I'm the brand. Pay me, don't play me. They show up just to see me daily. Rookie sales hit like a top 3 slot. All my contracts say I'm not. Pay me, run that check. I'll be more than you ever expect. You gave me.
What going on, my savages? Welcome back to another episode of that Brown Town Opulence, man. Hit that like button, subscribe and share, and tell your friends because y'all already know what it is, man. We getting, like Jamel just said, black folk, let's get their money. Because I'm telling y'all, bro, the market is in limbo. I don't know what to tell y'all right now, what the market is, but it is some prediction. And I do want y'all to relax. I do want you to relax, but the market is in fear. Just not in fear. It is in extreme fear. Because if you don't know what that means right here, man, I'm about to show y'all right quick. The fear and greed index, this is what measures the fear and the greed in the index. So right now we're in extreme fear. So in layman terms, in simple terms, what that means is extreme fear means you need to be buying, not selling. You need to learn how to take your emotions out of this game. And when the market is red, you need to be buying. That's why you got your dry powder, which is money, sitting on the sideline for these moments like this, man. 25 is extreme fear. From 0 to 25 is extreme fear. From 26 to 49 is fear, and 50 is neutral. Then greed is 51 to 75, and then 76 to 100 is extreme greed. And like I said, it's the exact reverse for extreme greed and greed. So when we get the greed and extreme greed, you need to be selling, taking some profit. That's how you make your money right there, man. When there's blood in the water, you need to be buying it up like now. You need to be like a shark out there, buying up everything. I'm telling you, buying up everything. You talking about last night, big dog. I'm telling you, man. But have no fear, because Moneymane is here. Because I'm telling you right now, and we looking at this, I'm about to show y'all the VIX. That's another indicator that you can look at. That's another indicator you can look at to determine what the market is doing. Is we in fear, extreme fear, or we in neutral, or we in greed? You can use the VIX to determine that. Now, I was gonna tell y'all this little technique that I had learned, but it never came to fruition. So I just didn't bring it to y'all. But I'll tell y'all right now, since I ain't gonna say we're gonna get to that point, because if we looking at this right here, the VIX is at $18.64. That would have closed today, and it actually was red. Believe it or not, that's why I said this market is in limbo, man. It don't know. It want to go low, but at the same time, it ain't. It's saying extreme fear, but the VIX ain't saying we in extreme fear. Not to me, at least, because between this point of 14, you can say $14 up to $20, or up to $20. That's where the VIX is basically stagnant to me. Like the lower, the closer it is to 14, the better we are with the market. And as y'all can see, we only up $4, 1860 on the VIX. Now, if we was over 21, if we was $21 and up, in the VIX, then yeah, I would have caution on buying and holding anything in this market right now. But seeing this and listening what I heard from Tom Lee that I'm gonna play for y'all, I'm not that extreme fear. I'm buying up. This is a buying opportunity for me. This is a buying opportunity for me, man. I ain't staying on too long just to let y'all know, but I'm bringing y'all this information so y'all can run this back on the replay if you need to. But like I said, the fear and greed index at 25 and the VIX right here, y'all can't even see it. The VIX right here, 1861 now. It went up 1 cent. But like I said, I already got my line marked out. Let me bring this down. It's like 22 right there. So around this $21 mark right here, where I'm moving the red line down to, that's where we should be concerned if the VIX gets over 21. Now, with us still being under 21, I ain't gonna say it ain't serious, but the market doing something crazy in my eyes to have us right on the edge of extreme fear. And then the VIX ain't even close. It's not even in the 21 and above range to be in extreme fear. But y'all see this at the top. I don't know if y'all can read it or not, but buy between 40 and 60. Now, y'all see back here in 2025, we got all the way up to this point where I said buy between 40 and 60. That's where we know is basically like a crash in the market when we get up to these ranges. Y'all can see back here when it was $65. That was 2024, August 5th, 2024. I remember that day. I made me some money on that day playing the put option. And then also right here, like I just said, April 4th, 2025, April 7th, 2025, there was another big red day down right there. But even when we had that big drawdown back in at the end of April, not the end of April, the end of March going into April. At the end of March going into April, you can see like the market never did reach them highs. That's how we knew we were okay. So that's what I'm trying to bring to y'all right here. The VIX is telling us that we are okay. We are okay. We're not in danger zone of anything being under 21. That's what I wanted to like. Calm down, and take your emotions out of this game. You should just be seizing this opportunity to buy up everything, get anything possible that you can. I don't know where they big mouth, man. I don't know, man. It is what it is. You know, I do my thing regardless of who in here. But I appreciate y'all for the one that is in here. Just hit that like button, subscribe, and share, and tell your friend about that Brown Time Opulence, man, because we can get to that money over here. Then, with that being said right there, man, like I said, I got Tom Lee right here. Let me go ahead and change that real quick. I can't get back to it. Hold on. I got Tom Lee right here, man, telling y'all about these semiconductors. I know a lot of us probably need tech stocks, heavy in these tech stocks, because they real growth stocks right now, holding up. The Mag 7 been holding up the market for a long time, and this is what Tom Lee's saying right here.
Is a classic buy the pullback opportunity. Historical data shows that declines of this magnitude are typically recovered within about a month.
Tom, I guess maybe the big overarching question right now is whether or not this dip is the sign or beginning of something deeper, or whether or not investors should be comfortable just buying it.
Dom, we published a note yesterday looking at the 17 times that the semi index, SMH, had fallen 6% more in a single day. It'll may or may not surprise viewers, but these almost always occur in the middle of a bull market, that these sharp one-day drops are not a sign of a top, but are actually rather viable entry points. 1 month later, 88% of the time, the semi index is higher with a 12% median gain, meaning your 6% drop is more than recovered within a month. So I actually think this is a buy the pullback moment.
Do you feel as though any of the valuations across that chip spectrum feel overwhelmingly overbought at this point?
I mean, in some ways we know these stocks are overbought because technical measures like RSI have never been more overbought, which is going to put a lot of weight on earnings Wednesday for Micron. But I think when you look at valuations for the market overall, it's actually cheaper today than it was 6 months ago. The S&P earnings have actually gone up almost $50 since January of this year. So the forward PE went from 19.4 to 18.4. So as viewers might think the market's actually ahead of earnings, it turns out the stock market still hasn't caught up to the rise in earnings so far.
He also explained why the Magnificent Seven have recently lagged the broader market. According to Tom, investors are still trying to understand the Mag 7's new narrative.
All right, that rise in earnings is always a big focus, not just for the chip names, but for the hyperscalers, those mega cap tech stocks, those Magnificent Seven type names. We know they've been lagging. Is there anything that gets investor sentiment turned around for those Magnificent Seven mega cap tech and media names?
I think it makes sense. The market is trying to understand sort of the new narrative around the Mag 7 because they went from asset-light companies that produced a lot of free cash flow now to ones that are more balance sheet intensive, actually funding what will look like a larger balance sheet. I do think investors are going to start to view that balance sheet as a workforce, right? I mean, the reason they're spending so much money is to replace essentially, human endeavors with AI. That balance sheet is going to be deployed and generate returns. So I think over time, investors are going to start to view that as a moat. But you're right, we're in a transition period of that narrative.
Tom Lee believes the sharp one-day sell-off in semiconductor ET.
Hopefully y'all understood some of that. If you didn't, I'll break it down a little bit. So basically, Tom Lee saying this pullback is nothing to be worried about. It was expected because it usually happens in the bull market. And y'all already know we've been in the bull market for months. Ever since 2026, we've been in the bull market. We've been running up and having these small pullbacks because we're going to look at the S&P, NVIDIA, and SpaceX in a minute on the chart. And I'll show y'all when you zoom out, when in doubt, zoom out. And y'all can see the difference between what he's saying. Like we not even having a dent into the growth or the gains we have made over these last months, because it's been months. I think we had ran up like 10 weeks straight. So this pullback correction is not putting a dent into anything. That's why I say this is a big buying opportunity, especially if you a long-term holder like me in the NVIDIA. If you got the cash to go ahead and get in there, or DCA in it if you can. Remember, this is not financial advice. This is for entertainment purposes only. I'm not a financial advisor. I'm just a little bit of old country boy. They're trying to learn the stock market and make some money. But with that being said, man, I got another one right here. Here it is, right here.
Tom Lee has raised his year-end S&P 500 target from 7,700 to 8,000. He believes today's AI. Tom Lee has raised his year-end S&P 500 target from 7,700 to 8,000. He believes today's AI investments by the hyperscalers will eventually translate into meaningful profits and earnings growth. At the same time, he warns that a significant pullback is still likely, with elevated margin debt becoming one of the key risks investors should watch.
Because, I mean, the market feels like it's fighting for something internally. We're having this rotation away from the mega caps, as I was just discussing with Dan Ives. Like, what's going on here?
Well, I think by the end of this year, we're facing a lot of turmoil in the near term because we have inflation, and today's PCE is telling us maybe the level of inflation's peaked, but it's still pretty high. Mm-hmm. We've got the war and the shortages it's going to create, and we of course have the Fed, and the market's going to test the new Fed, especially his new policies. And we have the lockup expiration of these massive IPOs. So I think there's a lot for the market to digest. But by the end of the year, we're going to be looking at 2027, where a lot of this is anniversaried in. And I do think that's going to be the start of one of the biggest rallies of our lifetime.
Oh, wow. Okay, so we're at 73.50. We'll call it there now. You've been making the statement that even as you raise to 8,000, you expect a pretty big swoon sometime this summer.
Yes.
And then a massive rally to get you back to 8,000. I mean, you better have a huge rally off whatever you're talking about to reach 8,000 if you really expect some correction of magnitude when you're here.
That's right. So Scott, yes, I think there is a drawdown. You know, margin debt now is up 55% year over year. It's the fifth highest in almost 75 years. It's almost always associated with the need to adjust for that speculation. So I think that's the fourth reason we have a drawdown. But the reason I think we rally so big next year is kind of what Dan said, that the hyperscalers are going to monetize all of what they've built. And that's going to create prosperity for Americans who use AI. I think it's really going to be a time of actual disinflation and a lot of growth, and that's why we can get well beyond 8,000 by the end of the year.
Isn't part of the message in the mega cap pullback we've reached sort of peak tolerance for spending from these companies?
Yeah, and I think it's an adjustment. You know, it's they went from asset light to asset heavy, so it's like they kind of gained a lot of weight, and we're just wondering if they're attractive still. But for every user that is now leveraging AI to generate income, that person's going to be willing to spend more for their service. So I think there is monetization, and we're just starting to see it.
Tom Lee has raised his year-end S&P 500 target from 7,700.
Now I got this. I'm trying to get it up. I just found it again. I got this screenshot of what he was saying about the margin debt. So basically, I'm about to explain it while I'm trying to get to it for the ones that don't know. So the margin debt basically is people borrowing money. People that's on brokerage accounts, that's in the stock market, they borrow money to invest in the stock market. And eventually they're going to have to pay that money back if a stock doesn't move the way they expected. So it's a high risk endeavor. And it has reached the pinnacle of the breaking point, to where the point we ain't had that significant pullback that they've been talking. And then, like you said, it's a lot of catalysts that's going in. That means it's a lot of things that's happening all at the same time that the market has not digested. That means it hasn't figured it out or put it into the stock market to you know, like your stomach, digest it so it can understand what it, get the energy and understand what it done ate. So here's the chart right here, man. So you can see right here. Shout out to Joseph, whole Bowtie Nation, for putting this chart up, man. I've been had this thing for a minute. I just didn't show it to y'all, but y'all can see right here this red arrow that he got pointed going up. The margin debt in S&P 500 real growth in 1997. All data from FINRA, which includes both FINRA and New York Stock Exchange firms. CTEX for more info. So you can see it right there. And these little the gray lines is the recessions that had been going on in, you know, that time period. And then the real margin debt growth is the one we looking at right here. And then you got real S&P 500 growth, which is the bottom line. So we looking at the top line compared to the bottom line, and you can see 503% on the real margin debt growth compared to 338.1% at the time of this screenshot. S&P 500. So that's why they not only predicting that because of this, the margin debt, a big drawdown later on, but because we in an election year, and usually the stock market pull back in an election year, we still got an unresolved war that's going on. But I think the market already done priced that in because it's not affecting the stock market as much with the negative news or whatever news come from that. But like you said, the new Fed too. So I think that's what the period we in right now is the new Fed period, where the market usually pull backs after the new Fed is introduced. So we done had a new Federal Reserve, a new Fed come in and introduce itself, and he's gonna be like the talking head for whatever they're gonna do with the interest rates, cuts or hikes, dovish or hawkish if he sound like that, and you know, PCI and CPI and all that. You know, they play a part in it too. So this number, it hasn't happened yet. This downturn for this hasn't happened yet, in my opinion. In my opinion, right now we in the new Fed pullback. We in the new Fed pullback because when this margin debt and the election come around, election pullback, whenever they're gonna happen, I think it's gonna be a bigger pullback from what we got right now. So on this V-shaped recovery right now, I'm expecting us to recover and keep running up. That's just my opinion. Like I said, this is not financial advice. I'm just taking what I heard and what I've been listening to, and we gonna see what it do, digest it, and move forward. But Dan eyes right here. Like I said, Jamel, I was about to say more. Jamel, we're talking about, we got him. Let's listen to him real quick.
Hard today, but Dan Ives says investors shouldn't panic. In his view, this pullback is a buying opportunity, not a sign that the AI boom is slowing down.
The pullback in the Kospi up, we call it 90% so far this year. It's a healthy pullback. It's not an indicator of anything from a memory chip perspective or demand softening, and that's why we view this as golden opportunities to own the core winners across chips, software, and infrastructure. And I view it as nothing, as nothing more than that.
Okay. So you'd be a buyer of all of these memory names on any pullback that they have.
Look, we view it. I mean, like when I look at I look at SK, I look at Micron, I look at everything that we're seeing on the memory side. I mean, it's 15-1 demand to supply in terms of what we're seeing across the board. And that's a derivative for being bullish on NVIDIA, on what you see in AMD. And then tangentially, even though right now they're sort of in the penalty box, when you look at the hyperscalers from Amazon to Microsoft to what I believe Alphabet here, I mean, that continues to be our view. These are just gut check moments, and we're third inning one out in terms of this AI game.
Dan also shared his views on the hyperscalers, including Alphabet and Microsoft. While the Mag 7 have lagged the broader market recently, he expects them to regain leadership and outperform in the second half of the year.
You're talking about them as a single organism of the hyperscalers, the Metas, the Microsofts, the Alphabet, et cetera. Whereas they become more idiosyncratic. They're not maybe all going to be at the finish line at the same time. Some are going to finish early, and some might get passed up along the way and might keel over and need some water. I mean, how do you judge them all as one when they're clearly not?
Yeah, it's a great point. Scott, I don't judge them as one, but I view it as a year ago, right? I mean, where everyone, very super negative and Alpha. I mean, our view there was like that narrative was way overdone. And I think they proved it otherwise. I continue to think Alphabet, even the stuff that we saw yesterday with engineers leaving, that's a buying opportunity. I think Microsoft is the most oversold of these names because it's my view on the enterprise, that's their backyard. Copilot clearly was disappointing, but in terms of Azure and all the growth that we're seeing in the field, I think earnings as we go into the next few quarters, that's going to be a significant catalyst. I think a lot of these names in terms of Mag 7 that are underperformed, I think they outperform in the second half of the year. And it's our view, tech stocks are up another 12, 15% rest of the year.
Memory stocks got hit hard today.
There it is right there, man. So all the experts that know way more than we do, they saying this is just a pullback and an opportunity to jump in on some of these memory stocks and the chip stocks, man, the semiconductors, to ride this wave back up in the second half of this year. So I'm already positioning myself in some of these plays, and I'm gonna be honest with y'all, man. These last 2 days, I've been learning this strategy about day trading, and I ain't introducing it to y'all or nothing like that. I guess he is. I don't know. All of them got money, so I guess they is. But I've been learning this day trading strategy. I told y'all I do not suggest day trading. I done lost over $5,000 day trading, not knowing what I know now, and to the point to where I'm like, bro, I need to try to get all them money back, but I know it's gonna take time. Like, if you ain't willing to lose big, then you ain't willing to win big, man. You got to be able to take risks in this game, but to learn from your mistakes, because they not losses, they just learning lessons. So that's what I take it as. Them L's I took, they learning lessons, because now I'm better. But like I was saying, man, I'm doing option play. I got my long-term portfolio. It ain't as big as yours, but I got a long-term portfolio that I don't touch at all. But the option plays, that's what I've been trying to learn options better and get better at it. So I dibbed and dabbed in Micron 0-day to expire option, day trading off the 5-minute chart. I ain't trying to tell y'all the whole strategy, but your boy made about $500 in 2 days, and maybe 40 minutes total. In 2 days, out of 2 days, 40 minutes total, I made about over $500. That's good for me. Now, I ain't go in heavy. Now. Like I said, I'm still learning this, and I'm still practicing and testing it. But one day I might bring it to y'all. Hold on. My fault. I had a phone call. Can y'all hear me? But yeah, so that's what I've been learning the last 2 days, man. And I wish I would have, I was skeptical in trying it earlier this week because I was out there on the football field and I really couldn't look at it. But yesterday, before practice, I took a chance because we were riding on the bus and I was looking at it while we was on the bus till we got to the destination. Then I had bought one right maybe 5 minutes before we get out the bus, and then boom, we walking on the field. Your boy up big just like that, based off that strategy, man. But looking at this right here, like I said, we're gonna take a look at the S&P NVIDIA because that's my favorite stock. Plus, it's a chip company and SpaceX right here. But it's like I told y'all earlier, man. It ain't no need to panic because the VIX telling us not to panic. Like I showed y'all, it's still under 21. If it was over 21, then we have a problem. But since it's just at 18 and a half, and looking at the total stock market, as y'all can see, even this the daily chart right here for the S&P 500. I'm keeping my lines, but if y'all can see right here where my mouse at, going across to these two, we forming a double bottom right here, man. And that's big because a double bottom is a bullish pattern that's in the stock market. For y'all don't know, just look it up. Double bottom. Just look up double bottom right here at 722. 722 and a half. Let's just say 722 and a half. We got that double bottom. Then we done created a doji right here too. That's another sign that there's gonna be a change of direction because it's indecision. But I take it as a change of direction until we had that change of character. Then we can really confirm it. But for right now, we'll be watching it. Like I said, this is the daily chart and double bottom, positive, bullish. That means we're going back up. And may even create all-time highs before we end up getting that big pullback from the election, the margin, debt, and everything else the market ain't digested and put in yet. Then we can see that pullback. But I think the stock market looking like it's setting up to keep running up, to create new all-time highs before we pull back on that. But don't take my word for it. I'm just speculating. Just looking at the chart right here real quick. But like I told y'all, this pullback ain't nothing compared to where it done ran from March 30th all the way up until now. And y'all think this is scary? No. Even this run where we pulled back on March 30th, like I said, you think that was scary. Look where you came from April 2025. Bruh. You ran up all the way almost a whole year. You was 1 month away from running up a whole year. Non-stop with small pullbacks, just like we got right now. So, and you pull back a little more, you can see like I'm saying, when in doubt, zoom out. This little pullback ain't nothing. So it's just a buying opportunity. Plus, we got that double bottom right there, and I'm just not saying that. Now moving to NVIDIA right here, man. Like I said, it's one of my favorite stocks. One of really the first stock I ever bought and invested in. But that's a long story what happened. But same thing right here. It done hit it broke through some of my levels. But I really, that $200 level on NVIDIA, that's where I really get concerned at. But that's where I really buy. March 20th, 2021 was scared. Or you talking about 2020. 2020, that when the pandemic and everything crashed. That when I should have got in, but I ain't know what I know now. But we sitting right on here on I would say my last support level is just 192, and we dead on it. It had touched it earlier today, but you see it closed at 192.53. So, and then in the after hours it's not 192.10. So if we drop below the 192, I don't know if we get back to 170, 171. I don't think we get back to that. But as you can see right here, there's another double bottom at this point right here where we at with this week done ended. We had another double bottom on NVIDIA. So I'm expecting this to bounce off the 192 like it did earlier. It did early in the day, bounce off 192, went up to 194, even though I know it wasn't a strong bounce. But I'm expecting this thing, if it break past 200, then we're going back to 215, 216, 217. We break past 217, then we off to the races back to all-time highs, man. That's why I've been playing it in this range right here. As you can see, this blue line right here that I'm on and this top blue line, that's the range I've been playing it on. So anything outside of that range, below or above, then that's a change of character for me. So that's my take on the NVIDIA. Now, SpaceX, y'all already know. Sell emoji, man. I know y'all got in IPO. So y'all should be up within 153. But this thing really, people that got in at the IPO probably selling, because I know one of the ones, guys I watched, Stock Mo, he got in on the IPO and he sold his. I don't know, I can't remember how much he sold, but he sold when it was 200 and something. And they know how to read these charts real good, but a lot of people sold up there at the high. So that's why I said I would have been doing if I would have got in the IPO. But like I said, I was just gonna go for one stock, one share, and it looked like I probably wouldn't have got it. Maybe I would have, maybe I wouldn't, but it's neither here nor there because I'm still gonna end up buying this stock eventually. I told y'all on my last live that December is my time after all them lockup expiry dates are over. The stock should be maybe $70. And I heard $63. Maybe it go down that low. But they still gonna have the inclusion on July 2nd into the Nasdaq. They did the inclusion today for the Russell 2000. I think they went in the Russell 2000 today. So what I heard was they buy the stock at the last second of the day. I don't know how they do that. They got them computers and whatever, but them big Russell and Nasdaq, they're gonna buy the stock at the end of the day, whatever price it is, on the last second, right before 4 o'clock Eastern time, PM, when the market closed, they buy the stock and include it. So that might be one of the reasons why it went down. Like CMO was saying earlier, manipulation in the stock market, man. They drove their price down on this SpaceX so they could buy it low. Because I know they not the only ones. The Russell and the Nasdaq is not the only ones. They're gonna be buying billions of dollars worth of this company. Like these institutions that got in at the IPO, they probably sold, but they ain't gonna tell you. They probably sold. Some whales probably sold that went in on the IPO. They got a lot of shares just to get some profit, and now they're gonna jump back in eventually. You gave me 12 there when I asked for 75. Yeah. So Stock Mo, the guy I watch, he on YouTube. Y'all can go check him out. He allocated for 660 shares, I think 660 shares, and he only got 28. So yeah, everybody was getting 3 to 4% of what they asked. Some people, depending on what platform you got or have brokerage account, they got more. All depends on the brokerage account, but That's just what it was, man. But like I said, I was going for one, and I was like, it probably ain't even worth it. I'll probably just get in and like this later, and then just ride the wave like that. Cause I ain't holding this thing. It ain't going into my long-term portfolio yet until December. So yeah, they're gonna do it, man. I ain't got nothing else for y'all. Shout out to Jamel for sending me that report, dog. I was reading it, and boy, you just gave me an idea. That's all I'm gonna say with Black Wall Street. You gave me an idea, dude, guy, and I'll share it later on Moneymane, because I want everybody to hear it when I got a lot of people in there, so they can start coming over here, and because they're gonna have to come over here to see it. But I'm gonna say it on Moneymane when I do go live again. Whenever that is. I'm not going live today on there, and probably not tomorrow neither, because I don't make these. I got 2 videos to make for that channel. Then I got Dirty Bird, got to edit a video for that one too. But Brown Town, I'm doing more of the live streams because I can get the watch time for the channel longer than just making a regular video, because I had to have that video to go viral to start getting the watch time and subscribers. So this is easier for me to talk about it all at one time. But yo, man, I appreciate y'all for coming. Hit that like button, subscribe, and share, tell your friend about that Brown Time Opulence hosted by your boy Moneymane. You already know.
Me fifth round money, but I gave you first round value. Every seat filled, every camera on me, every highlight mine. Pay me. 4-6 don't match the light I bring. They know I'm worth the Super Bowl ring. You can't discount destiny if you wanna keep me investing. 4-6 don't match the light I bring. They know I'm worth the Super Bowl ring. You can't discount destiny if you wanna keep me investing. Pay me, don't play me. Fans show up just to see me daily. Punch your sauce in like a top 3 slot, but my contract say I'm not. Pay me, run that check. I bring more than you MS red. Run it up, business is booming, let's talk numbers.
My savage, Moneymane in the thing, I'm a T and playing no games. Should already know my name, but I SPCX play. Got my YouTube poppin', man. Like, subscribing, everything. In between, you already know. Moneymane, you already know.
Fifth round pick, but I don't move like one. Lost 40 mil, but I still ain't done. They ain't paying me right.